What's going on, everybody? Welcome back to my YouTube channel. In today's video, I thought I'd do something special for you all and close out the prosperous 2023 that we've had and lead into 2024 by sharing with you my exact step-by-step trading plan that I'm going to be utilizing all throughout next year. So I'm really not going to hold anything back in this video. There's nothing to hide. You can already see my trading plan on the right side of the screen here. It is extremely simplistic and extremely straightforward, and it allows me to be consistently profitable. And one thing I want to preface before we get into the bulk of this video is that no aspect of this strategy is proprietary. All of this information, just like every other strategy on the internet, is readily available for free. I get asked this a lot of the time, and I see other educators get asked this question as well. Well, if all of your information is free on the internet, then why should we, for example, join your community or buy your course or pay for this service or get mentorship from you, etc., etc.? And the answer to that is pretty simple. There's a big difference between a strategy and mentorship and guidance. For example, the Currency Pros community that I operate, there is so much more to it than just a strategy. Of course, we do have an online course, and it's basically all the information bundled into one. And the benefit of that is that you don't have to go searching for everything. It's just compiled in one cohesive environment that makes the learning process a lot simpler. And aside from that, there's obviously ongoing weekly content like weekly live sessions, weekly analysis, trade ideas, collaborating with other community members, etc., etc. The list goes on. And of course, direct access to the educator themselves. So that's the benefit of communities and courses, right? But I just want to clarify that these concepts that we're going to talk about today and that I've talked about so much in my previous videos, they've existed for decades. I'm not going to sit here like an idiot and pretend that I invented Fibonacci or that I discovered these exact numbers and figured out what a break of structure was and understood liquidity and I pioneered everything. No, I'm not that kind of guy. I come to you with complete honesty. These concepts have been around for decades. Even the people you're thinking of in your head right now who you think invented it, they got it from somebody else, I assure you that. So none of this is proprietary. Obviously, each trader has to personalize these concepts into their own formula so it resonates with them. And that's necessary so that you can actually utilize it on a daily basis comfortably. So I have, of course, personalized this strategy. But I just want to clarify, the reason I'm giving all of this to you for free is because this is not where all my value lies. And all of this stuff is readily available on the internet anyways. I just hope that I'm providing it with more clarity and more clear directions so that you guys can actually take it and utilize it in the markets right away. So now that I've got that little rant out of the way, let's dive into the trading plan itself, and then we're going to go over real chart examples of trades that have presented themselves within the past month, which is typically a very slow time in the market, right? The end of Q4, things are really slowing down in the market, but with this exact strategy that we're about to go over, there has been plenty of opportunity, which you're about to see. So let's get started and talk about the actual trading plan. So at the very top of the trading plan, there's a section called risk and time. It's a visual representation of the parameters in which I trade in. So not the strategy itself, but more so the framework in which I operate. So for example, the first thing here says 4-hour time frame. This is literally just a constant reminder for me to stay on the 4-hour time frame, because that's where I operate best. And that's where I believe that this strategy shines in its truest form. It is, of course, able to be utilized on lower time frames, such as the 1 hour or the 15-minute. Those are definitely great time frames for this strategy. But in my opinion, the 4-hour is the best because it acts as the higher time frame and the execution time frame. Typically with day trading strategies, you need more than one time frame. You need a higher time frame anchor and a lower time frame execution. But the 4-hour time frame, for me anyways, provides both in one. So it's really efficient for me. And so this acts as a constant reminder to just stick to the 4-hour time frame. I will go to the daily sometimes if I need a little bit more of a macro perspective, but overall, 95% of my time is spent on the 4-hour time frame. The next thing on the list is 2% capital per trade idea. This is a bit of an iffy subject because what works for me might not work for others. The reason I'm comfortable risking 2% per trade, both on funded accounts and personal accounts, is because I know my numbers very well. I know my average win rate. I know how long a losing streak may last for me on average. So I'm very familiar with my numbers. And because of that, I'm able to reverse engineer my statistics basically and figure out what makes most sense for me in terms of risk management. So for example, if you have like a 20 to 30% win rate, you might still be profitable if you have an extremely high risk reward ratio on average. But because you have such a low win rate, you certainly cannot be risking 2% of your capital per trade. That would be absurd. But if you have a very high win rate, let's say 60%, 70%, 80% win rate, then you can probably risk more than 2%, right? So my point here that I'm trying to make is that this rule here is just for me. I'm sharing my personal trading plan with you all. You need to figure out what rule works best for you. It could be 1%. It could be 0.5%, it could be 5%. I don't know. On my personal accounts, I typically risk more than 2%. But again, you need to know your numbers, right? My numbers are not your numbers. This is where journaling and backtesting comes into play, because then you really get to know your true statistics as a trader. Now, the next two things on this trading plan, again, they're just a constant reminder for me personally. And they say no trade interference and set and forget. So this year in 2023, I've really progressed more towards being a swing trader. I used to day trade on the lower time frames, and I find myself just moving higher up and aiming for less frequency as I mature in my trading career and as my life takes me in other directions. So I prefer more of a semi-passive approach to trading. That's why I stick to the 4-hour time frame mainly. So these two things here, no trade interference and set and forget, they really go together. That's why I'm talking about them at the same time. I've realized in my trading that my results are the best when I just leave the trade alone. Anytime I interfere with it, like moving it to break even or taking partials or moving the stop loss into profit, like trailing the stop loss, all of those things negatively affect my results. That might not be the case for everybody, but for me personally, I noticed that it drastically skews my numbers and it affects my overall profitability long term. So I find that my results are best when I don't interfere with my trades and if I literally just set and forget them. Obviously, the set and forget thing is a bit debatable because I do monitor my trades, right? Like I'll check them a couple times a day. Overall, these two just kind of go together. Like I'm just not interfering with my trades. I set a limit order and I let it happen. It's either hitting stop loss, hitting take profit, or maybe not happening at all, and then I delete it. But it's one of those three outcomes. All right, so now that we've gone over the risk and time aspect of this very simplistic trading plan, the next step here is the actual process itself. And as you can see, these are the trading rules. Now, the cool thing about the application I'm using called Notion, which is how I created this trading plan, is that you can create checklists. And so the process section of my trading plan is a checklist. And once you check the box, it strikes through a line on the sentence that you've written there. So that's pretty cool. It's a very accountable way to utilize your trading plan because it can be with you at all times while you're trading. As you can see, it's side by side with my chart. So I can literally tick things off of the list as I'm looking for trading opportunities in the market. Now, the first example that we're going to talk about, the real trade example here, is the Australian dollar versus the Swiss franc. And this is, of course, on the 4-hour time frame. This is a very textbook, very textbook setup in terms of this trading strategy. A lot of members in the Currency Pros community took advantage of this. So I also want to just preface this by saying I decided to take all of 2023 December off. I wanted a mental break and I also wanted to focus on creating content for my community. So I haven't traded at all in December. I passed my FTMO challenge, reached a bunch of personal milestones, and then just decided I'm going to enjoy the holidays. I'm going to take a break. I'm going to chill. So I didn't trade at all throughout December, but a lot of my community members have been catching all of these setups, and these are the ones that I'm going to talk about today. So this one is first on the list, and I think it's literally a textbook setup. So let's go over it step by step. So you can see that I have a few things annotated here. Why don't I actually use the replay tool just to clean things up a bit so we can focus here. So this is the trade setup. It's obviously a long position and it encompasses everything on the trading plan. First on the list, I have wait for a clear break of structure with imbalance. So let's take a look at this here. I'll use the replay tool again and bring price right back to here. As you can see, we have a break of structure, a liquidity grab, which we'll talk about in a second, and imbalance here. The imbalance is the gray box. I'm using a custom-made indicator for the Currency Pros community. It automatically plots the imbalances. It automatically plots the imbalances on the charts in the form of this gray box. So we've established that there is clear imbalance there. Very impulsive movement that broke through structure. The structure on my chart is also indicated by our proprietary Currency Pros indicator. It shows us the major swing points in price, as well as imbalances, as well as a few other really cool features as well. Clearly, we broke through this high right here, which was our last structural high. So that's a break of structure with imbalance. So I can check that off the list. The next thing on the list says identify where liquidity has been purged. Well, I've already annotated that. It's right here. Now, I wanted to talk about this briefly as well. I mentioned this in previous videos, but the only way you can tell a liquidity grab is a liquidity grab is if price has already shifted its direction. Okay, so because there was a break of structure here to the upside during a previous downtrend, that's how I can tell that this was a liquidity grab. As you can see, this was not a valid break of structure. We just have this wick just very slightly piercing through that previous low. And immediately after that, after testing the liquidity from this low, we very impulsively pushed to the upside. And if I just play price forward, you can see that we continued to break through this high right here. So because I can identify this break of structure clearly, that confirms that this is a liquidity grab, okay? I want you to replay what I just said and very carefully understand. I'm only able to identify this as a clear liquidity grab because I was already able to identify this as a break of structure. They go together. So I can now go back to my trading plan and check this off the list. I identified where liquidity has been purged. Now, the reason that's so important is because if you can't identify the liquidity, then you likely are going to be part of the liquidity. We obviously don't want that. So we want to identify where liquidity has been purged. If we're looking for a buying setup, right, we're looking to go long in the market, then we want to see sell side liquidity being purged, because that tells us that there's likely enough fuel to the fire of bullish momentum that we can take price long and it'll work in our favor, basically. So it's just another confluence to add to aid your bias. So the next thing on the list is to draw Fibonacci from the swing points. So I use the Fibonacci retracement tool, not as an indicator, but as a measurement tool. I want to really set that in stone here, okay? I don't see the Fibonacci tool as an indicator. I see it as a measurement tool. And I think that's where a lot of people misunderstand the tool itself and where a lot of educators misuse the terminology, because it's truly not an indicator. Many of you who watch my channel, you're familiar with smart money concepts. A lot of you understand the concept of premium and discount pricing, right? We obviously want to buy low and sell high. Anything above 50% of the current trading range is premium pricing. Anything below 50% of the current trading range is discount pricing. Well, with the Fibonacci tool, I simply take that a step further by identifying extreme premium and extreme discount pricing. And I use the 71 and the 79% levels here. To be more specific, just the 71. I really don't use the 79. But the reason I have these numbers is because they're actually very common numbers within the Fibonacci numerical sequence. I have simply rounded them up to slightly increase risk to reward. And I also just have a bit of OCD. I prefer rounded numbers. So before we can actually drag the Fibonacci tool, I mean, obviously you can see here that it's already happened because I'm using the replay tool. Let me play price a bit forward. So in order to actually draw the Fibonacci tool, you need to have a solidified high and a solidified low. You cannot drag the Fibonacci tool just subjectively. It needs to be based on logic, right? You need to have swing points to drag the tool from. I'll show you exactly how I do this. I click on the Fibonacci tool. I have my magnet mode enabled on TradingView. So my cursor goes right to the exact low of this wick. I click the Fibonacci tool and I drag it exactly to the wick of the high. And then I double click the tool so it pulls up the settings. I go down here and just click the arrow button on my keyboard just to extend it out into future price because it's more visually satisfying like that to me. You don't have to do that, but it's just something that I choose to do. And then I'll set up my parameter tool. But as I said, you need to have a solidified low and a solidified high in order to drag the tool. So obviously we had a solidified low here. Even the indicator printed that arrow showing that it was the most recent swing low. However, the swing high, as soon as price starts retracing, I feel comfortable dragging the Fibonacci tool from the swing low to the swing high and referring to this as my solidified high. Now, if I continue to play price forward, you'll see that, after a few more candles, the indicator prints the most recent swing point here as well, annotated by that arrow tool. So that's just further confirming where I have drawn the Fibonacci tool. So as you can see, from this swing low right here to this swing high right here, this is the current range that we're now trading within. It's a bullish range. And because of that, I'm looking for extreme discounted prices. I'm looking to enter a limit order at the 71% level. So let's go back to the trading plan. Draw Fibonacci from swing points. We can obviously check that off now. Now the next two things are very straightforward. Set the limit at the 71%. I'll just check that off because I already have parameters here. As you can see, the entry right here. And then let's look back to the trading plan. Stop loss at 100% and TP, take profit, at 0%. What does that mean? Well, the stop loss at 100%, that's basically where you started the Fibonacci tool from. So that would be this swing low. So again, using the magnet tool on TradingView, once I have the parameters here, I'll drag the stop loss and hover my cursor over the swing low, and it'll literally snap right to that low. So I know it's very precise. Same thing with the take profit. You drag that snap it right to the high, and that gives me every single time a consistent risk reward of 2.45R. So this goes back to what I was saying about not interfering with my trades, right? Because if you interfere with these trades, moving your stop loss to break even, taking partials, etc., it skews the numbers. If I literally set and forget these trades and let my strategy play out over time, I can have more confidence in my numbers. I can confidently say my risk reward ratio is 2.45R. If you, however, are taking constant partial profits, moving to break even, etc., doing all these sort of management techniques, then you actually don't know your risk reward ratio because it's always going to be constantly shifting. That might not necessarily be a problem for you based on your strategy, but for me, I prefer this mechanical style approach to things. So I need to be confident in my numbers. So this system allows me to fully know my numbers and be confident in them. So let's go back to the trading plan and check that off. This is literally as simple as it gets. I just walked you through my entire trading plan. Let me play price forward. As I said, this is a very textbook setup. As you can see, pretty minimal drawdown, and it went like straight towards the take profit. And guys, this was halfway through December, right? So this is at a time where most people aren't trading because they're afraid of choppiness or low volume. And a lot of the time that can be the case actually. I personally chose to take time off for other reasons, but typically during the end of Q4, we do see a lack of momentum and some choppy price action. However, that doesn't mean that it's not tradable. In fact, the majority of my community right now are still trading. It really is a personal choice at the end of the day. I chose to take time off. Sometimes things can be choppy or slow, but overall the strategy still prevails, especially higher time frame strategies. It just requires a lot more patience, but overall it still plays out very nicely. All right, everybody. So here's another example. We're looking at Euro AUD. So that's the euro against the Australian dollar, and of course on the 4-hour time frame. Let me use the replay tool again, just so we can bring it back to where the trade idea would have been likely identified. So let's go back to the trading plan and uncheck everything so we can start from scratch and make sure we're adhering to all the rules. So again, this is a very textbook setup. This happened around the same time as our last example, around halfway through December. So again, a time that most people aren't trading, yet you can still see this working out perfectly. If we look at previous structure, we're clearly in a downtrend, right? Bearish momentum is prevailing here, obviously. We were moving sideways for a while here, but we're clearly moving to the downside once more. So let's head over to our trading plan to the right and check things off one by one. So first, we have to wait for a clear break of structure with imbalance. We have a clear break of structure to the downside, heavy bearish momentum, big full body bearish candles here. So that's clearly a break of structure to the downside. We can see that there's imbalance here, which is the gap between these candles. Imbalance is a 3-candlestick pattern. In this case, in a bearish scenario, it's the gap between the previous candle's low right here and the following candle's high. The gap in between is where the imbalance is located. So my indicator is showing me that there's an imbalance here as well as an imbalance here. So we can clearly check that off the list, right? Break of structure with imbalance. So let's check that off on the trading plan. Next, we have to identify where liquidity has been purged. I also want to mention too that this next step here, the second step regarding liquidity, it's not 100% required, but it certainly increases your probability of success if you're able to spot where liquidity has been purged. Because if you can't find where liquidity has been purged, then that means that there's a good chance that when you take a trade, you might be part of the liquidity purge, which is not ideal. So if you can spot that it already happened previously and the market is moving in your favor, it basically just solidifies your directional bias, and it can really increase your confidence in the trade and the overall probability of success. So in this case, I can identify this as the liquidity grab. We had a swing high here and a swing low down here. We had a new swing high printed up here, right? So at the time, before this bearish move occurred, it would have looked like bullish continuation, like maybe we were going to start to trade to the upside and have a trend reversal. However, only in hindsight, after the break of structure occurs, that's when we can identify where the liquidity grab was, okay? I really tried to nail this down in the last point, but again, I get so many questions about liquidity. I really want to nail this point down, you know? You can't really identify a liquidity grab as soon as it happens. You need to have that next step of confirmation, which is the shift in market structure. If price is trading bullish to the upside like it was for a short period of time, at the time, this would look like a break of structure and people would be looking to buy. So the only reason I'm able to call it a liquidity grab is because immediately after it occurred, we saw a huge heavy momentum drop to the downside, which created this very clear break of structure that I've already identified here. Because of this break of structure, I'm able to call this a liquidity grab, okay? I really hope you guys are paying attention to what I'm saying. So I'm gonna go back to the trading plan and check this off of the list. Next, draw Fibonacci from swing points. I've already done that, but again, just to further drive this point home, the swing high here was clearly solidified, right? Because we broke structures to the downside. So this is a very clear swing point to drag the fib tool from. But where do we drag the fib tool to? Well, at this current point in time, there is nowhere to drag the fib tool. Like I said in the previous example, we have to wait for price to start actually retracing in order to confirm that there's an area to drag the fib tool from. Now this happened very quickly because I'm obviously in replay mode. In real time, you would have been able to do this. This would be the solidified low because we started retracing pretty significantly back to the upside. So this is where you would drag the fib tool to. So I'll do that for you just so you can see exactly how it's done once more. Hover over the swing high here with magnet tool, the magnet tool on TradingView enabled. So it goes directly to the high and drag it to that swing low. It should snap right to it using the magnet tool. I just go here and extend the retracement tool outward just for visual representation. Again, it's not necessary. It's just totally personal preference. And so that is the third step checked off the list. Set a limit order, so a sell limit order at the 71%. That's pretty straightforward. You go to the 71%, hover over the line and drop your parameter tool. And then you can double click the parameter tool and get the exact entry point, basically copy and paste that into your trading platform so you can execute the trade. And then the next thing on the list is set the stop loss at 100% and the take profit at 0%. So again, pretty straightforward. You just drag and drop the parameters using the magnet mode on TradingView to the swing low and the swing high. And then you can double click on the parameter tool and copy and paste your exact take profit, copy and paste your exact stop loss directly into your trading platform. And it's literally as simple as that. So let me play price forward now. And there you have it. Another pretty textbook example of this trading strategy. We went over a long position and a short position. These are both trades that many of our community members in the Currency Pros community executed and profited from. We've had a lot of challenge passing lately too, which is really cool to see. Makes me very proud as an educator. I've been trading for like 6 years now, and this is the simplest that I have ever seen trading. So many people on the internet are just trying to really overcomplicate things. And I'm just sitting back, just watching and laughing. Like there's so many people with ego problems for some reason. And I just really don't understand that. It's almost like educators in the space want to appear to be as smart as possible just to stroke their own ego. But in reality, they're doing everybody a disservice because they're making it out to seem like trading is like this super complicated thing that you need like a degree for or something. And the reality is that it's just simply not the case. And I can tell you from personal experience as well, ever since I started adapting this more simplified style of trading, I've been more profitable than ever before. And on top of that, the most successful traders that I have met in real life, like 7 and 8 figure traders, I can tell you that they all adapt this more simplified approach. Maybe not this specifically, but they all gravitate towards higher time frames eventually, especially as their capital grows. And they all adapt to trading less frequently rather than more frequently as their capital grows and as their experience grows. In my opinion, this is like a natural progression as you mature in your trading. I don't want to have that blanket statement though, because it's not the case for everybody. Some people just simply resonate more with a day trading style, and that's totally fine. But I can confidently say that this strategy, or this style of trading at least, can work wonders for most people, especially if you have a busy family life or if you have a 9-to-5 job. And there's nothing wrong with having a 9-to-5 job, because I think having additional income can greatly benefit your trading, mostly in a psychological sense. It makes trading a lot easier when you're not 100% reliant on the income that you produce from trading. When you have other things to focus on, it actually makes you drastically more profitable. Trading, as many of you should know by now, is not something that you can force. It goes against a lot of basic human nature. Like, we want to work harder to earn more money, right? If we want to do better at something, we're programmed internally to just work harder because we think that we can make results that way. And in most things in life, that is true. But trading is not the case. Like it doesn't work that way for trading, because we can't control the markets. Even from that statement alone, that should make it very clear. We don't control the markets. So we can't possibly work harder to make more money. It simply doesn't work like that. So traders who make more money are better decision makers. That's what it comes down to. They're not working harder, they're working smarter. We've all heard that phrase before, right? Work smarter, not harder. And in trading, that really rings true because it's literally what you have to do. You have to sit on your hands most of the time. You have to look at a potential trading opportunity and say to yourself, it's not really like an A+ setup, so I'll wait for the next one. It requires that level of patience, and that's where the real money is made, to be honest. So I truly think that this strategy is beneficial for the majority of traders. It's really beneficial for having a certain type of lifestyle. It makes trading a lot more passive than most people are used to, which can be really, really good. It can let you achieve that financial freedom, but also having time freedom and location freedom. So it really allows full freedom, like in all facets of life. So I think it's really great for that. And I truly hope that after watching this video, you feel the same way. I hope this resonated with you. And yeah, that pretty much sums up my trading plan for 2024. I was using this for the majority of 2023 as well, and it just worked wonders for me as well as my community members. So many of our community members have seen life-changing results, getting funded 7 figures, getting record-breaking payouts, replacing their jobs, like all kinds of things. And if you guys want to get involved in the community as well, I'll leave the link in the description of this video. Aside from the course being available, all the concepts that I utilize taught in detail, we have weekly ongoing content. So there's live sessions with me directly where you can ask me whatever you'd like to ask me. I provide weekly analysis of my entire watch list. I break things down step by step. And I also share all my personal trade ideas, not as signals, but just as educational content to show everybody how the strategy is utilized in real time. A lot of our members gain a lot from that. The community as a whole, I'm very proud of. We've got a lot of people in there who are just fantastic people, and we're growing rapidly on a daily basis. So as I said, I'll leave the link in the description for that. Make sure you follow me on Instagram too, my personal account, as well as my Currency Pros Instagram account. I'll leave the description link for those as well. And I want to thank you all for watching. I hope you all had a wonderful 2023. And my wish for you is that 2024 is even more successful, even more prosperous, and provides so much more clarity and abundance for you and your family and your friends and just everybody. I truly wish you all the best, and I want to thank you for subscribing to this YouTube channel. We're almost at 50K subscribers at this point in time of recording. I didn't think that was possible. Like when I started this channel, I knew it would gain some traction, but I didn't know it would be to that extent and this quickly. So yeah, we're almost at 50K, and I just want to express my gratitude and thank you all for the support. Thank you all for watching these videos. It really means a lot to me. It makes me very happy and fulfilled that I can provide value to you all, especially for free as well. We're not all in the space where we can financially afford certain education. I'm a firm believer that everybody should invest in their education when they comfortably can. But if you're not at that point, then it makes sense to consume free content. So I'm very happy to be able to provide free content that is of value. I'm very grateful that it's being received in the way that it is. So again, I just wanted to thank you all and express my gratitude. Thank you for being a part of this journey with me. We're going to all achieve wonderful things together in 2024. So thank you all for watching, and I'll talk to you all soon.